Thank you, Jeff. I think it's a cruel and unusual punishment on the part of the organisers to subject you to a finance presentation during the graveyard shift, 4 o'clock on a Friday. So we'll try and get through this a little bit quicker maybe than we might have done otherwise. I'm going to talk about the options for financing from a consumer perspective, clearly, and a little bit about payback. I heard the comment from Kevin earlier on about payback hasn't been a strong feature of the discussion. It's obviously of interest to us in terms of how we discuss these things with customers. Now, I should say we're very interested in this as a market area for some of the reasons outlined here. There are about 2 million dwellings in Ireland. You probably saw that figure today. I think of particular interest, though, is that of the 63% that were built before more stringent regulations, we think a lot of those don't have a mortgage on the property because they tend to be older properties. So clearly, if you put these things together, it would appear on the face of it that customers who are living in houses with poorer energy standards are more likely to have a very low or no mortgage, which I'll come on to later, is one of the financing options that is available to them. But when you put it all together, it does look like a very significant market. Now, what we did was, just for the purpose of today, and I feel a bit nervous presenting these numbers to a group of energy experts. They're our take on it, so forgive me if we've got any of these numbers wrong. We took what we thought was a typical house, which is, your 1970s four-bed semi, the type of house you see all over the country, really. It would have no mortgage or low loan-to-value, which opens up financing options. It doesn't have a great energy rating. And we worked out that their energy bill, was about €400 a month, there or thereabouts. Now, obviously, that varies wildly from household to household, but that was sort of our start point. But I think even at that, we do need to recognise that for most customers or consumers, this is a big decision. No matter how much money they spend, it is a big decision. And it will probably come second, in line after the purchase of the house or maybe a car as being one of their big lifelong outlays. Now, we took an example just for the purpose of illustration, which, again, is just some of the things which we thought a customer might want to do. It worked out about 18,000 when we looked at it. Grants would bring that down to, say, 12,700. And the Halo loan example is based on 12,000, so that's pretty similar. Now, in terms of working out, we figure that the customer would save about €153 a month, about $1,800 a year, which I think is higher than some of the other examples that I've seen, but that was where we got to. Now, there are some assumptions there, obviously. Future energy prices, like nobody believes that oil is going to stay at $75 for the next 25 years. So clearly energy prices are going to push those savings way up. But I think one important point in terms of consumer decisions on borrowing is that the difficulty is the benefits to the customer are very intangible. This is not like buying a car because I'm going to drive away in it after I take out my loan. And it may not be, from a customer point of view, even like a new kitchen. It might be more beneficial than a new kitchen, but I can walk into my new kitchen and touch it. These are benefits which I'm expected to believe will happen in the future, and I may not know very much about it, in which case do I believe it. So it is a difficult decision for a customer to borrow on that basis. Having said that, finance options do exist. Now, I'm going to take you through two options, which doesn't obviously take you through the biggest current one, which is personal savings. Now, in that case, it's an investment, really, obviously, but one giving a very high return, I would think, because if you're thinking $1,800 per annum on an outlay of $12,000, that's a pretty spectacular return for anybody. Now, the two options I'm going to take you through, and I think I probably should say this up front, I don't think are available from all banks. I mean, I'm going to be honest with you. Some banks are not lending. They're not lending for anything, so they're certainly not going to lend for this. But some banks are lending. And I think what we'd be encouraging Bank of Ireland customers is to come and talk to us, and any other bank's customers to either talk to their own bank or, even better, come and talk to us, because it is an area of interest. Now, one thing which hasn't been talked about much is equity release, which can be quite flexible from a customer point of view, but maybe doesn't seem to be getting as much traction. And I say that because the customer can borrow more money in theory. It can be spread out over a longer period. The loan is secured on the property. Now, my second plug for the bank is that we have the lowest variable rate mortgage, so the cost of funding is very cheap, particularly at the moment. And I think if anybody asked me, one thing I would say is rates won't stay at 3% forever. So if you ever wanted to do a piece of work like this and fund it through your mortgage, it's a really cheap time to do it. And that will obviously enhance the benefits that you get back afterwards. The benefits of going down this route, which is equity release, it uses the equity in the home already. It's a very low cost means of doing it, and it's relatively flexible. The disadvantages are there are legal costs attaching to it, which aren't part of the bank charges, but you need a solicitor. And it is secured on the property, which some people will be more nervous about. Now, one could argue that the value of the property is going to be enhanced as a result of doing this, so actually this is the right way to do it in that sense. But clearly customers will make their own minds up. And the cost will work out at about $168 per month over 7 years, which if you think back to the savings we mentioned early on of 153, these two things are pretty close. And this is only on a 7-year mortgage, so clearly the customer would enjoy the benefits for a great deal longer than that. Now, the second general area that's opening up is tailor-made specific green loans in a variety of formats and structures. We have a green loan, which is a general one. Obviously, the Halo loan, which we're just about to launch, would be even better than that. But taking our green loan option, it's just a different type of lending. It's because it's unsecured, it's more expensive, and that's typical, in every type of unsecured loan, in every type of lending market. The amount the customer can borrow will be less, and it'll generally require to be paid back over a shorter period. Now, the result of that is it's much more expensive. Now, there are benefits in that you don't need a solicitor to set it up, so it's much cheaper, fewer upfront costs. And it is an option for customers who maybe have a high loan-to-value but have repayment capacity, so they can afford to pay a loan, they just don't want to or can't put it on their mortgage. So in that case, it may suit better. And the drawbacks are, as I mentioned, it's more expensive, and the overall payments are higher per month. So, taking the two options together, you can just see that comparing the two of them for the $12,700 investment, it does work out quite a bit cheaper if you can do it on your mortgage. Now, I just want to stress again, these are Bank of Ireland rates I've used. Other bank rates will be different. I think the relative difference between them will be roughly the same, but the absolute numbers may vary a bit. But I think it's when you swing around and think about the benefits that you're getting that maybe is the space we need to work on, because the benefits are there for the life of the retrofit. The outlay is there for the life of the loan, and the life of the loan is either 5 years or 7 years, which is much shorter. And I honestly think there will be some benefit to the value of the house, so you might argue, in a sense, that the value's built into the property already, and the energy benefits are a bonus. Now, the total investment is recovered in under 10 years, but again, that does assume that energy prices stay where they are today, and I think that's a huge assumption over a 10-year period, a huge incorrect assumption over a 10-year period, because they're likely to increase, and as they increase, the benefits to the customer of applying the retrofit and the relative cost of the loan change fairly dramatically. And if you think in terms of the life of the retrofit, if the customer's in the house for 20 years, that's 10 years of unadulterated benefit. That, believe it or not, is it. In conclusion, listen, the perception is that this money is not available, and I think that's one of the reasons why the savings application is so high. I think the second reason is that customers don't understand the benefits. And I mean, it's funny, I was actually looking at this personally on our own house over the last year, and I'm not an engineer, but I have been astonished by the contrasting advice I've been given by people in terms of what I should do. I've been told, everything from heat pumps are fantastic to useless. You can pump a wall, no you can't. You must look at solar panels, no you mustn't. And I think that is one of the factors that is inhibiting the takeoff, is consumer understanding of exactly what am I buying. And if you go back to the previous example, if I drive up or walk up to a motor forecourt, I know exactly what I'm getting. Now, it might be a depreciating asset, but at least I know it's an asset. Now, in terms of the options are available. I think we certainly do want to do more of this type of lending. I think it's been mentioned already. The type of customer who goes through the process of looking at doing this is the type of customer who is a better credit risk. And I think most other banks are going to see that sooner rather than later, and they will also enter the market. Having said that, any individual customer is going to need to understand for themselves which is the best finance option. But there are clearly now 3 options available: an unsecured loan, a mortgage, or savings. And on savings particularly, you get a pretty dramatic return. I mean, our case study certainly would suggest that on pure financials, it does make sense. And we didn't even count, as I said, the asset value to the house or how much warmer you are going to feel. And I don't know what sort of value you can put on that. Not a financial value, certainly. I mentioned demand is really low. I mean, we are not getting customers coming into us in any appreciable numbers talking about retrofit. It's very, very low demand at the moment. And much more of things like equity release is still going on, home extensions or other forms of home enhancement, I suppose. I think in terms of the improvement in demand, I think it will be driven by increased awareness over time. And maybe one of the big ones there is people talking to each other. The most powerful advocate and advertisement will be friends and relatives who have done this already. And I suspect as the numbers build, they'll build incrementally quicker as more people find out about it. An upfront grant process would help, but we haven't seen that as a big inhibitor from customers coming in. Wider improvement in confidence, obviously. And the other big driver, I suspect, going forward in terms of demand will be higher energy prices. I think the danger with that, though, is the demand will ebb and flow in line with higher prices, and the industry would, I presume, want something more sustained over time. So that's it in short. We'd be encouraging customers to come in and talk to us, and certainly anything that the delegates and their businesses can do to encourage customers to come and talk to us, we'd be fairly happy about. Thank you.